Hey guys, what is up? George here from the Millionaire Project. It's been a while since we last had a video posted here. I believe the last video we posted was about a month ago, and we were right around this point here. We just broke below the 100-day moving average, and a lot of people were starting to panic. As you can see, since then, we've came down much lower, and it's just been one wild ride. So I wanted to make this video to give you guys a little recap of what has happened in the market. And I also wanted to give you guys an update that we're going to start posting these videos weekly. So every Sunday, we're going to post a stock market update video. Here we watch SPY. If you don't know, SPY is the S&P 500 ETF. So this is going to give you a gauge and sort of show you what's going on in the market as a whole. So every week, we're going to give you a recap of what happened that week. We're going to talk about what we're looking at for the coming week and what we also are expecting for the coming week. So just a little update. This video here is going to keep it pretty short and simple. Like I said, that's pretty much what the point of this video is here. So let's go ahead and get started and look at SPY. So a lot of traders who started trading after the COVID-19 crash in March of 2020, they focused mostly on tech stocks, the tech sector. Why? Because these stocks make big moves and you can make a lot of money from them, especially from options trading. So a lot of investors started looking at tech stocks and they really missed opportunities outside of the tech and other innovative sectors. If there's one thing that we know about Wall Street, and any experienced investor can tell you, is that they don't just like to let their capital sit. They want it to be put to use. So when we start seeing things like this and the market starts to come down and the tech sector starts to lose momentum, we start to see money rotate into other sectors. And that is exactly what we've been seeing here. So for about the past 2 months or so, we've seen money come out of the tech sector, QQQ, and we've seen it go into other sectors, specifically commodities. So we've seen commodities pick up a ton of steam over the past few weeks. Wheat, precious metals, gold and silver, energy, corn even, all these commodities have started to gain a lot of value. Of course, another thing we know is that markets often rely on moving catalysts to allow these shifts to go up and down. And one of the biggest geopolitical events that we have going on right now is the tensions between Russia and Ukraine. So why are these commodities moving up? Well, first of all, they're sort of acting as a safe haven. But second of all, when we look at the main reason why these commodities are moving up is because Russia and Ukraine are major suppliers of these commodities, and the war is starting to put pressure on the world supply. So in the past couple weeks, Russia has had a ton of sanctions put on them, and it's crippled them economically and financially. They've been crippled. So a lot of these commodities that are exported from there will not be getting exported anymore, and there will be a shortage. So that is why the prices has been going up. So coming into the second week here of March, we're going to be focusing on commodities. But something to note is that you have to understand a lot of them are starting to approach overbought levels. So if we look at GLD here, for example, which is gold, you can see that it has moved up in a pretty vertical line, and even the RSI is telling you that it is an overbought level, and you can see that it hit a high on Friday when the market closed. So you wouldn't want to buy in at this level. You would want to wait for a pullback. When we look at SLV, which is silver, you can see the same thing. Silver was actually lagging behind, and in the recent weeks, it started to pick back up and take it back to this resistance point here at which it started breaking out of with some pretty strong volume. Again, you can see it's starting to approach an overbought level. This trend can just keep going on and on. So we look at this here. This is wheat. You can see that wheat, some very strong volume and seeing some just a vertical move, essentially. It was trading at such low prices, and then it just spiraled out of nowhere. So as we see, these commodities are starting to go up. Russia is a global supplier of wheat, and if they stop exporting it, that means there is going to be a shortage of supply while demand will remain high. So going back to what I was saying, we're going to be focusing on commodities still, but we have to allow them to come down, have a pullback, and then we also have to be mindful of the approach that we're taking. You don't want to load your entire portfolio with it. You want to have a decent position size, and you want to manage your risk. Another thing we're also going to be looking at in the market this week is going to be any downside potential that we get. So remember, we said a lot of these names that investors flooded into that were at these overbought levels are now starting to see corrections, Tesla being one of them. So although we have opportunities in other sectors like commodities, as we said, we have to see that the biggest trend in the market is that it is moving down. So we can also play this downside. We look at something like Tesla here, you can see we opened up around this level, which was around 830 on this candle, and it hit a low of 760. That is a $70+ move in one single day. You have a short position or you have put options on that, you can be very profitable if you know how to play them correctly. So a lot of these companies that rallied in 2020 and 2021 that seen these highs that are now considered to be overvalued are starting to come down, and we can make profit on that downside. So all in all, what are we getting from this? We're finding that the volatility is bringing opportunity, but we're also taking a much more selective approach on trades and holding for a shorter period to capitalize on the shorter term movements. So the strategy we've been using lately is to find one or two good setups, take those, get our profits, and then be patient. Let the setups come to you. There's no reason to force a trade. So after you collect your profits, sit on the sideline, wait a little bit. Cash is also a position. I like to say during times like these, cash is king. You will never be wrong just sitting cash and observing the market. If you don't know what's going on, or if you don't feel comfortable with trading in these market conditions, that's perfectly fine. So now, looking at SPY's chart, we could see that Friday's candle gap down here. On Thursday, we actually pushed up to the 20-day moving average line here, depicted by the purple line, and we actually got rejected, as you can see. And on Friday, we opened and we gapped down below the 10-day moving average line. So this is going to be our main range of focus for this week. We have resistance right here at the 20-day moving average line, which happens to be around 438 or 440. We're going to need a break above that for a bullish scenario. And our support is going to be 428. If we fail to break above this point here, we can continue to decline and come back down to break below this 428 here, at which point you can expect a lot of selling volume, and we may come back down to retest this 410 support. Again, if this scenario happens, this is going to provide a short or put entry on setups in large caps such as tech. So looking at the future, what can we expect? Well, really, we're not going to be expecting much because right now we are very news driven. So any single headline that we get can cause a shift in the market. So there's really no trend. There's no uptrend, there's no downtrend. This is volatility. We've been moving up and down here for the past couple weeks, and this is just going accordingly to the headlines that we're getting regarding the Russia-Ukraine situation. Another big catalyst that we have that hits more home here is going to be March 16th. We have the Fed meeting that is going to be related to rate hikes. So if we do recover and come back up to these highs, which we do expect we're going to do that, we're not going to be expecting a vertical move like we've seen in the past. Instead, we're going to be expecting something much more choppy where we'll break above one of these resistance points and then come back down to test them as a support and then trade around this range for a little bit before coming up, potentially breaking below a little bit if we happen to get a headline or any other catalyst before moving back up to test this high. Looking at the future, there's really only two catalysts that would make us catapult back up to these highs. First being the fact that Putin will consider negotiating. As we said, there have been a ton of sanctions put on Russia, and it's pretty bad for them. So that may be something that he wants to consider in the future here. And number two is going to be the Fed meeting that we said is on March 16th. So the Fed is going to consider raising interest rates, which we have not seen since the start of the COVID-19 pandemic. And if they end up raising them at a lower level than what we expect, this is going to be very good news for the market, and we can expect to see a pretty strong rally back up. The reason this is going to be good is because it saves companies a lot of money. they're not going to have to pay that much interest when they borrow money. So investors and companies like this. We did hear from Fed Jerome Powell last week, I believe on Thursday, and he did hint to us that we were going to get a 25 point hike. But again, this can change. March 16th is the date that we're going to be waiting for, and we're going to be waiting to see what we get. Really, for us to see any sort of move back up to these highs, we're going to have to break above this double top that we created here. And as we've seen, double tops are pretty wicked for the market because it sends us down very far. You can see that anytime we've hit a double top, the market has come down pretty far. So you can see we created a double top right here and the market came down. We created this larger double top right here and we've come back down. And we sort of created a double top right around this point here at 440 where we came down and are now using this 428 as support.